how would you look at the risk of a hurricane? The season after, we had 4 hurricanes on the East Coast, which was absolutely extraordinary, versus the year before. Rates got very low for risk premia.
Acts of God will exempt. These were acts of men and women.
A reality check on that. We'll take this a step further. It is not only a man-made hurricane, but one created by you and your cohorts, Mr. Blankfein. The financial services industry lobbied for the repeal of the Glass-Steagall Act in 1999 that allowed banks to use their custodial power, a special privilege granted by our government, to allow banks to theoretically serve our country. They abuse that custodial authority to assume huge risks in investment markets, a law they lobbied to change. You can see the president of the United States at the time, Clinton, signing it right there. The bankers also lobbied for something called the Commodities Futures Modernization Act of the year 2000, which allowed the banks to trade their crooked insurance in secret and exempted them from all supervisory authority. It is not an exaggeration to say that a slot machine in Reno has more supervision than this multi-trillion-dollar credit market created by these men. And then to help grow the hurricane, the then CEO of Goldman Sachs, Hank Paulson, made a personal plea to the Securities and Exchange Commission to allow banks to leverage more money against their capital, lifting the cap to as much as $4,000 worth of risk for every $100 worth of capital that they held in reserve. The bankers claim it was a perfect storm, but the only thing perfect about it is its ability to line the pockets of Wall Street at the expense of our country. Look at just the past few years of compensation for some of the CEOs testifying today. Numbers that don't even yet include the 2009 gambling spree they went on with the bailout money. $410 million in personal compensation for Goldman Sachs CEO Lloyd Blankfein over the past 3 years. Doesn't include the money he'll make this year. $195 million in that time span for the CEO of J.P. Morgan, Jamie Dimon. Don't know what his comp will be this year. And $132 million for just 2 years' work for Morgan Stanley boss John Mack. Brian Moynihan has just stepped in his role as the CEO of Bank of America, but he stands to do just fine. His predecessor, Ken Lewis, made $150 million, I should say, in the 5 years before stepping down. All of this in theory to facilitate the lending of the world's most fungible, least proprietary, most commodity product, which is the U.S. dollar. Unfortunately for the rest of us, their man-made money-making hurricane has devastated our country economically. 10% of our nation is out of work. Real employment stands at nearly 18%, working 20%. The deficit in this country has skyrocketed over the past 10 years. Our national debt now more than $12 trillion. That's a T dollars. For more than 2 million families, they've lost their homes to foreclosure in just the past 3 years. And this doesn't get into senior citizens in this country who live on fixed incomes, denied interest on their savings, just so banks can receive tons of cheap money from our government in an effort to try to gamble their way out of the hole they created. So you can to you hurricane makers, we say it's time for you to come clean about your actions. Let us fix your crooked system and finally pay us back for your destruction. Today, Morgan Stanley CEO John Mack and J.P. Morgan's Jamie Dimon talked about clawbacks that they've instituted for their banks to recoup future losses. But what about the clawbacks for the bonuses that you paid yourselves creating this bomb over the past 10 years? Those dollars I just referenced, and so many more like them. The ones that you made on a massive fraud that the American taxpayer currently and to this day pays for. That doesn't even get into the record-breaking bonuses that are going to be awarded for last year's work. Gambling with American bailout money after the fact, creating no restructuring whatsoever in the way you do business. Take a listen to Mr. Mack's justification during the recess this morning.
Well, look, I have to run a company, all right, and we've had a record revenue year. I've got to keep people in place.
Potentially record profits, Mr. Mack? But they are clearly the result of the massive windfall taxpayer support provided to your business over the past couple of years. Doesn't that? You remember that? Anyway, it only makes sense that this country would follow the lead of Great Britain, France, and any other rational enterprise and enact a windfall profits tax in order to recover the windfall state support that was delivered. Look at it this way. If we found out that Katrina was a result of somebody's get-rich-quick scheme, wouldn't we demand restitution? Why aren't we demanding it here? Joining us now, former governor and attorney general of the state of New York, a man once known as the Sheriff of Wall Street, Elliot Spitzer, and Larry McDonald, author of A Colossal Failure of Common Sense, the inside story of the collapse of Lehman Brothers. Governor, your thoughts on today's testimony.
Well, first, I just want to say your lead in here was saying that to be nice to you. You gave an exquisite articulation of what is wrong with their entire worldview.
What strikes you? I mean, what about
the piece of it that is most amazing when you talk about the fact that savers in this country, real Americans who take $100 a week, put into their savings account, are getting zero interest. Mm-hmm. The reason they're getting zero interest is the Fed needs to provide money at 0% for these banks, who then buy T-bills, guaranteed return of 3%, 4%, 5%, leverage it up. They make a ton of money. That is the hugest subsidy they're getting. So people say, didn't they pay back the TARP money? The answer is TARP is only a tiny piece of the subsidy they've gotten. It is this enormous transfer from savers, middle Americans, right into the pockets of these banks. We have got to use whatever legal theory we can to get clawbacks from the people who got bonuses over the past 5 years under illusory theories of gain that were outrageous, that created this entire scheme.
I think what confuses people the most is the fact that this is legal. You talk to people that don't know that much about it, but they know enough to understand some version of what we just discussed. And they say, isn't that illegal?
Well,
how is this legal?
It unfortunately became legal because the investment bankers put themselves in the position to control the flow of money back and forth. Tom Wolfe got it right. Brilliant book, Bonfire of the Vanities. Anytime there's a money transfer, they take a little crumb off the table. And as the pie got bigger, the crumbs got bigger. They lined their pockets. It simply should have never happened.
Larry, what struck me particularly about Lloyd Blankfein's testimony today, the CEO of Goldman Sachs, was his defense that you really have to be very sophisticated to understand how this is done. And what struck me was the only thing that was sophisticated about these men was their ability to, A, put themselves in that job and create that level of exposure, which is not everybody can create a $1 trillion insurance fraud because they just don't know how to do it. And then you have to be so sophisticated that you can create the fraud and then control the government and not get caught. But the job itself is very easy.
That was the thing about his testimony today. I thought his testimony was a very sophisticated testimony above Main Street. I don't think he really connected with people on Main Street. I've been out on the lecture tour all over this country, all over Europe. I've been doing these lectures in the most sophisticated...
On this subject?
On this subject, absolutely. With my book, A Colossal Failure of Common Sense. And first of all, there's so much pain out there that people still have so many unquestioned, so many answers that are unquestioned, but so many questions that are unanswered. But here's the most important point, is that years ago when banks failed, Continental Illinois, Drexel Burnham, and then that was in the 80s. And in the 90s we had long-term capital, and this disaster, in 2008 with Lehman, it's growing exponentially, and the next one is going to be even scarier. So we have to do something. These banks are not too big to fail. They're too big to succeed. They're too big to be managed.
What's lost on people is the lack of propriety in these jobs. Lending money is not a proprietary act.
And also what they admitted today, which is they know they're too big to fail, so they know they have a federal backstop, which means, as we've been saying for months now, there's an asymmetry between the risk and the reward. We take the risk, they get the reward. It induces them to take and make investments that are not long-term wise investments, and we get stuck holding the bag, and it is also very damaging to our economy.
And in the process of creating this funny money machine, it redirects money that would naturally be invested in other economic development in our country to the scam.
The issue that has not yet been raised that I'm aware of is the issue what I call follow the money. All the money we've given them, where has it gone? Has it gone into proprietary trading? Has it gone into overseas investment? Has it gone into direct lending to U.S. companies? Only the last of those builds our economy, and that is what banks are supposed to do. The first two, which is where they're making their money, we do not and should not be subsidizing.
Yeah. All right, Governor, Larry, a pleasure. Thank you both.